Hello, YouTube. Another one bites the dust. Another chart fails. And now we have QQQ or the NASDAQ joining the party. As a reminder, we were looking at these looking at Apple and Microsoft yesterday. So I'm not sure if it's time to say it's time to worry, but these tech stonks are turning into tech stinks. And we pointed this out yesterday. We're going to look at all that technical confirmation shortly. But looking here at the 1 day, Microsoft, Google, Meta, NVIDIA, Amazon, all down. But there are some big outperformers, including energy, including utilities, and including the Russell. Looking here at the 1 week, which was the warning we looked at yesterday, Amazon's now flat. Microsoft's down by 3, Google's down by 0.2, NVIDIA's down by 5, Apple is flat. So today looks scary, but it's not actually all that bad as we now look forward here to the monthly and higher timeframes. So tell me, Justin, what is happening? Well, it's this exact thing. It's the exact thing everyone said they wanted not that long ago. They said the market's getting narrow. It is getting top heavy. Well, we're seeing broader participation by other names now. Look at the Russell. Look at its monthly chart. It is up by 7.7%, bouncing nicely off the 2018 and 2020 highs. That's a pretty big move in 1 month. We look here to XLE. What are we up? We're up by 7.2%. So what's really happening is that we're just seeing rotation with the QQQ only up by about 0.42% now, which means that the S&P is actually not all that bad, which is what we mentioned before. And the S&P has not yet joined that failed breakout club. However, what we know now, I think it's much more obvious, is that QQQ definitely leads. So if QQQ is already in failed breakout territory, what does that tell us? Is the S&P now going to join? Is QQQ going to have some more weakness? And that's going to be really important. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. We put out videos every single day. So just looking here, we know, again, making a bit of a joke. I don't think it's time to sweat yet. Market is clearly doing well. We're seeing the rotation. That's what everyone wanted. But our old friend is back, Mr. Extreme Greed. So what do we do? Do we buy? Do we sell? Do we hold? Why? Well, because there's some ominous signals now being sent from the weekend video until today. I've pretty much said the same thing. I think we're going to make new all-time highs. I think it's going to turn into a failed breakout. Here we have QQQ from our turning point a long time ago now, going back to March, February, where we slingshotted off of the 50 MA, violently went higher. We hit resistance, and now we're backing off a little bit. So it was a turning point. The W is complete. The bulls have won. We've talked about it a lot. The question is where we go from here now. So on the weekly chart here, we just want to see whether or not the previous high at 34925 is going to hold. And if we're going to hold that weekly low, 34651. Otherwise, this weekly chart could also turn into what's happening on the daily. And like we talked about yesterday with Apple, the largest stock in the market. What do we have? Well, we have a bearish engulfing daily candle, which means we went up and slammed down and we closed way below the previous daily low. So that's not looking all that great. Again, 1 day does not signify a trend, but here's what we do have. 2 days of lower lows, and we got 1 day of lower high, a higher high, and now we're back down. We got 2 closes below. Is that the start of a trend? Well, we're going to have to blow out the low right here on the daily chart at 346.66 and 346.50, which means that, let me just go back here, which pretty much for me means just means that it's not a low, higher low, higher low. I need to see a lower low. So I was talking a lot about how I want to see that higher low set. If this is the higher low, we have to reverse right from here. And the one thing to remember too is that because we're closing near the candle low, that usually means there's downside pressure. So we would expect we're going to go lower. How low? Well, it's only Wednesday. We better make sure we watch that weekly low here. Why? Well, this comes down to the seasonal chart we talked about before. So this is a line chart. And I mentioned this to our private group this morning. So if you want to join me, Justin from YouTube, for 14 free days, you can go to thealgo.com. And I gave a whole bunch of notes this morning. So why would you want to join? Well, as I look here to my month-to-date performance in my account, I mentioned I've been away for the month of May. Not a whole lot happened in my account. Booms, 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 booms. I'm currently up by 7% on the month. That's not to say that I can replicate exactly the gains that you're going to see, but I think I'm doing a pretty good job so far. So I don't like to brag a lot, but if you want to join us for that 14 free days, you can see exactly how I'm managing my portfolio. You can see how you want to trade with me and do it for 2 free weeks. What do you have to lose? Worst case scenario, you just cancel in the 2 weeks and then you just go back and watch for free on YouTube. No hard feelings. So what happened today? More Twilio and Google Cloud expand partnership, blah, blah, blah. Didn't see any movement on that. The talk was about the Bank of Canada. And there's two things Canada gave to you guys. So like South Park says, blame Canada. Well, the first thing was that there's a lot of smoke in New York. The second thing is that the Bank of Canada surprised the market by raising interest rates again one more time. Raised them to 4.75, which means they're basically around where the Fed is now. But I think a lot of discussion is now happening around, well, is the Fed going to do that same thing? What if they do? Is that going to be scary? Is that going to be hurtful? Why? Well, again, I thought when I mentioned what I showed before that we would have the sell from Apple, a dead cat bounce, and then a sell on the Fed. Well, right now, everyone's talking about a pause. It's currently this is called the Fed Watch tool, which just tells us the odds for either a pause, which right here is at 69% as of right now, or 31% for an interest rate hike. Well, the Bank of Canada paused last time, so they paused last time, and now they're hiking now, and they report before the Fed. What's really interesting is that the Bank of Australia, the Bank of Canada have now both done the pause and then the hike. So if the Fed does pause in June, I don't think the market, again, think and know are two different things. I don't think the market should price in that's it. There's rate cuts still into the second half of the year. So right now we're seeing a template for America where I think Jerome's going to have to answer point blank that, yeah, it's still on the table for July. They've already said that, but I think that today provided a little bit of that. And we just look here to the dollar. We look here to the one-day chart. It's just unsure what it wants to do. It's trying to test previous support. It's trying to previous resistance. It's trying to bounce off of it. It's just not sure what it wants to do. Roughly stuck between the 200 and the 50, right in the middle. So I'm watching the dollar close. But what this means for me is that I think the market was repricing some of the potential for the Fed to do what others don't think is going to happen. What? Put in a W, go back to the highs, price in those hikes that Jerome said are going to happen. We're not going to be cutting. And that's why we see things like tech, which were down heavy. I'm talking Apple. This is what's weird. Apple's only down by 0.7. Microsoft down by 3. Nasty candle. Google down by almost 4. Bearish engulfing daily candle. There's a bearish engulfing. Volume's elevated, but it's not like wow. Amazon, bearish engulfing daily candle. Same thing for the volume. Nvidia, bearish engulfing daily candle closing at the low below the previous daily low. Bearish. Meta, lower low, lower high below the previous low. So it's below a pivot here that I have. I'm just not going to zoom out to see which one. And then we got Tesla, incredible run since April. It is up, it is up, it is up. It's dragging the rest of these names higher. It's the only one right now. Monster inverts head and shoulders, leading it to go up. But when we look here to other names like RSP, equal weight S&P 500, here's the breadth and depth you want to see. It's up by about 0.7 right now, but the volume's actually looking good, which means people are selling the names you like, Apple, Microsoft, whatever, and they're buying these other ones. Like what? Well, like the Dow, like the Russell. Russell's crushing it. We showed you up 7%. There's still a gap on the chart here. It just pushed violently off the 50, didn't even pause on the 200, boop, up. So people, what this means to me is that I don't think people are bearish on the S&P. They're bearish on the rotation. And what we talked about yesterday, I think, is what's happening here. So we look at a name like an Apple, where it's had multiple taps now. Let's just delete everything. So it's had multiple taps here, right? 1, 2, 3, all the way back up. Volume's dropping off. So a failed breakout just means that we got over a price but failed to hold it, which just means that there failed to be follow through. People are like, you know what? Failed to hold it. I'm gonna sell here. And for today, there's not enough buyers to meet those sellers. So natural spot to take profit is always at the relative high. You let it get back over, and then you can trade the blue sky breakout. It's just not happening yet. Still a higher low, so we can't call the bulls out yet. We're into extreme greed. The saying is don't buy extreme greed. The saying is sell it. So our failed monthly breakout crew, we've got Microsoft, check, Apple, check, QQQ, check. S&P is the one that is missing. So if we're going to be getting a move similar to the seasonality chart, which as of right now is just starting to play out, I'm going to be watching SPX for a clear number. It is 3,000. We made it to 42.9928, and today we made it to 42.9919. So close. It was so close. And S&P put in a double top to the cent. 42962, 42962. And as a reminder, that is our Fibonacci number here, 42961. So make sure you understand these math numbers because they appear to be very, very important. The bears defended that resistance zone today. And if they continue to defend it, we want to see whether or not the S&P on a monthly chart is going to be coming back down to 422.58. Final reminder, why is that so important? Well, tell me. All right, I will. You got it. So when we look here to our daily chart, we have a gap on the chart. And where's our gap? It's 422.92. So what this basically means is that if the S&P is going to come down and fill this gap, it means that monthly chart is going to be getting a back test of its breakout. If it does what QQQ, Apple, and Microsoft already done, that is how we get the W that completes here before maybe we go back up higher into July. Thank you so much for tuning in. And the weekend video is now queued up here on the left-hand side, so you can go ahead and watch that if you want more content. Thank you again.